The broadcast is now starting. All attendees are in listen-only mode.
The Warriors, what a cutting edge platform ForexAnalytix has. Check it out. I know there have been a couple of little hiccups on a major transition like this. I'd call it normal. So you have to get used to navigating the new site. Everything at your fingertips here. Your own live stream here, all the takeaways. Really great job by Steve Volge. Everyone give Steve Volge a hand. Can you guys clap for Steve out there? Or a hooray. I think he gets the day off because he's been up for about a month without sleep. So he's doing this to improve accessibility, make it cleaner for everybody. We already know the content's good, right? So nice design, Steve. Everyone in FACE and our members especially really appreciate it. We're headed towards the end of June, and it's a good time to lock in prices because things like life, there's a change a-coming. Change is gonna come. And speaking of change, so what's the Fed see that we don't see, guys? They're worried about incipient inflation, right? Well, although the dollar looks like we've had a second drive, a little divergence, I don't think this is it. Maybe we get a pullback. We should not get back under 94. Otherwise, there's something else happening. It's going to be deeper. But tell me where the inflation is with crude doing this. I know we're bouncing a little bit here. It's kind of confirmed. There's nothing I could do on a short-term basis. Maybe you would rally back to 65. Same thing's happening in the euro. Maybe we get some type of rally back to 1660 or so. I don't think this is a low in the euro, and I don't think this is a high in the dollar. You know, maybe the dollar pulls back off this flagpole to develop some type of flag in the coming days. Also, tell me, where is the inflation? Here. Does gold see any inflation? Does crude see any inflation? Does the dollar see any deflation? Do yields, which are coming down, giving you an inflation message? And finally, the last domino to take a hit is in the indices. So there might be some inflation that I can't see far into the future, but there's nothing I see in my charts that tells me that we have to worry about it. Okay, so I've been pretty negative the gold, even after the washout that we had here in the recovery. And, you know, when you look at some weekly charts, I'm not showing it here, you know, the 1240 area is going to be pretty important. I see no reason to buy it. Okay, so the shares have been acting tepid at best. So I don't think you have to worry about buying gold for a while. Okay, pretty good breakdown. Let's see if we get follow through this week. With the S&Ps down, and you know, this is something that should go down in this scenario, US dollar yen. This too is a little bit tepid for me with the kind of break that we're getting in equities today. You know, it might roll over, but I'm going to try and be patient, see if I get a better level to short, maybe up. This may have been 1, this could be 2, maybe we get a 3 in the middle of the week. Okay, so what about silver? Silver, a different story, really outperformed, but this is pretty damaging. So when I look at a bigger picture, and I don't think I have my charts up here, but I would think that we're going to wash out under these lows, maybe even retest these lows. 1580, how's that, Pedro? Keep an eye on maybe the 1580 range. I don't know where that's going to put gold, but you don't have to agree with me. But do you see the technical rationale for we're getting a wave of deflation? Doesn't mean it's going to last forever and then turn into a recession or depression. But right now the markets are saying, you know, Mr. Fed, I don't know if you should go again in September and December. So if things really start to unwind, the language will change. The 10-year, the yield, Dina? Well, the yield, I'm looking for sharply lower yields. Okay, we had this. I'm not saying we can't rally back to the 3% level. I don't think so, but I think we're heading to 265. 265 was an important level. So that's the way it looks to me. And the bonds aren't doing that much with the S&Ps down 18 handles, 20 handles. But I'm bullish bonds, looking for 128 down the road as a possibility. Okay. All right, so Steve is recuperating in a sanitarium. So it's going to be Blake and Stell and I today, and you guys. So have your questions ready. Really encourage everyone to, if you haven't, at least take a trial to check out the new platform and do this, you know, click on Forest Park. So Trent could line you up with a broker that as you trade will pay for your subscription here. And or at least find you a broker that maybe has better spreads or you feel more comfortable parking money there. Trent and Justin know multiple brokers. So it's kind of like they're a broker of brokers, kind of like manager of managers, what a lot of people do in the stock market. They shift from one manager to another, so they never have to take the responsibility for for any poor performance. They could go, oh, that guy's lousy, you're right, let me just switch you over to this guy. Okay, well, NASDAQ actually, I was looking for one more high in NASDAQ, but I think we're going to have more of a wave to the downside before that happens now. So I was actually looking for 73.50, and that's looking less likely unless it really digs in its heels here. So it's possible that was it. Okay, I mean, it is possible that this was it, and you know, we could break all the way back down to 69. Same with the S&Ps. If you're real bearish, you're looking for something like this from here to take us under this low. You know, people will get nervous once we approach a 50, and then the, of course, 200-day moving average. People, that's going to be the big test for the market. I think that we could take it out on this trip if I'm right. I was actually looking for some early week strength the way the end closed, and one more pop in the NASDAQ because it didn't look complete to me. On the daily, it's complete. Weekly, it looks complete. What do you have here? 1, 2, 3. What do you have here? So we've made 2 successive new highs in NASDAQ and diverged on the weekly. Not as clean on the daily. On the 4-hour, it's glaring, and that's why I thought we might have one more push up to 73.5. If the market holds from here and it goes up, that's fine. I already have bearish positions on, mainly in the banking bearish ETF. So if it goes from here, fine. But I thought we'd have one more drive, this being 1, this being 2, and one more shot up. And look at the glaring divergence here on NASDAQ, right? And on the 1 hour, you had it as well. Okay, so we're right at this 200 on the 1 hour. And even if we made one more run up above 73.50, 273.50, it would not confirm. And then I was scanning around and I was looking at, the dollar made new highs, right? So I was kind of surprised that, number one, even though I think it will make new lows, that the euro really did not make a new low when the dollar made a new high, right? High or low, right? Swiss, lower high. Not that it can't take out these highs after a pullback. Also, I was looking at Stell's trade. The NOK did not make a new high. Almost looked like for Stell, this could be putting in a right shoulder, left shoulder head, right shoulder neckline. And then here's the last one that is really kind of a classic. I think that if the dollar pushes one more time, US dollar SEK, Swedish krona, could be a textbook 3 drive up towards $9. So you have enough to chew on with my commentary here today? What's that? Martin Armstrong is forecasting 10% interest rates in where Europe. He sees a collapse of the European bond market. Yeah, I've interviewed Martin a few times, Ed. He was, and that was a few years ago, and he thought that it would start in Europe, will be ground zero this time, and it's going to be a sovereign debt crisis. So it starts in Europe. Maybe it's starting with what's happening in Italy. I mean, I don't see sharply higher rates yet. You would think that would happen with the euro in big trouble to try and support the euro. When it gets par or something like that, and then it migrates to Asia. And just one other thing that you may want to take a look at, and I'll put it up on mine. And it's very fascinating because we're getting into a potential trade war with China, right? So here's an ETF on China. Now look at this. It looks a lot like the banking shares, all right? So, we're making new highs. It hasn't come close to new highs. It's trading around the lows. There's your 4-hour. There's your weekly. Looks pretty vulnerable. Okay, so compared to what our indices were doing, China hasn't been able to get off the mat after the early in the year sell off. Okay, so I know there are options on it. It is an ETF. They probably have bearish China funds, but this looks pretty negative to me. And it seems like, at least initially, China's going to be hurt more by this than us, because look at our markets, NASDAQ, technology laden. So these, I think, are mainly state-owned enterprises and banks in the FXI. I think that's composition of it. But sure looks like a break. And this is not impulsive. This is just working off time, moving sideways. So those are my views coming into the week. I'm not doing anything aggressively. Maybe there'll be some counter trend stuff to do tomorrow. My gut is that there's going to be a chance to buy dollar weakness, sell euro strength, and that's about it that I have for now. And I'm going to turn it over to Blake Morrow.
Hey, good morning,
and see what. Hey, how are you? I know Steve's not here, so I tried to babble a little longer.
No, that's great. We all appreciate that. By the way, it's a pretty hectic day for ForexAnalytix. We launched the new version, as many of you guys know, the new version of ForexAnalytix, which is
Yeah.
out this morning, and it looks like this. For those, there's
Yeah.
a few subscribers that are seeing a blank page. You know, the problem is we didn't have the issue when we were in beta, but you know, you do a major release like this, and there's an issue that, and it's also affecting the chat room a little bit for some users, but very few. The developers are aware of it and they're working on it, and they're working feverishly. But for those of you that are using the new version, hey, it's all, you know, this is our first major upgrade from our old version, which I can't even pull up anymore. So it's a big deal. I mean, it's a big deal for all of us, and Steve and the development team have been working tirelessly for the last several weeks on this particular issue, trying to get this one out. So he is out today as he's with the development team, just trying to wrap up this one issue that some people are seeing, but it's very few. I've been through with the company that I was previously with the Wise Trade Group. We go through some major upgrades, and it was always a nightmare. But you work through the issues because there's a lot of unforeseen things that come up. So it just happens. But the good news about today's price action in the currency market is it's very slow. I think everybody's watching the World Cup right now. We have Sweden, South Korea match going on. So I think that and with England a little bit later today, it's going to be probably fairly quiet in the FX market. World Cup's always a big deal, especially to currency traders. So, but what I thought I would do is I would do a thorough analysis of these major currency pairs and kind of let you know what I'm seeing across the board. And Stelios is going to try to join us today. What time is your who do you have coming in as a
I was going to
today?
have Giuseppe Bazil, but I've been chasing him down. I can't reach him, so may not have
Okay,
one.
so we may not even have so this
Right.
may be a short 1 hour webinar today, but which is fine because the currency market is pretty quiet right at this moment in time. But I guess one thing that I want to cover before I get into the euro dollar is the dollar Canadian. I am long the dollar Canadian. I got pretty aggressively long on Friday. This is a big major breakout. Oh, and you know what? I want to also mention one last thing. For those of you that watched the week ahead video, I have to say that was my worst week ahead video that I've ever done. Do you know why, Dale?
Yeah, because you don't know what to say.
That's true. That's true. No, I did
it.
I did it on a Saturday night at like 11:30 at night, which is,
oh my God.
I know. And it's not for me. I'm an early morning person. I think very clearly early in the morning. But late in the evening,
I peak at about 9-10 a.m. and then I'm shot for the day.
Well, I was.
I know you have more stamina than that, but
yeah,
you know,
I mean,
that's what you have to look forward to. I
filmed the video, and it's like, afterwards, I was like, man, what did I say? You know, I didn't. My head wasn't straight. We had house guests that evening, and I, I didn't even have a beer. I didn't have anything. I was just so tired when I filmed it. I feel like I didn't do a really thorough job as I usually do for those weekhead videos, but I had to do it because we needed to get the video published early because of the release of ForexAnalytix. So for those of you that were like, oh, yeah, that wasn't as thorough as it usually is, well, now you know the reason why. But I'm going to tell you regarding the dollar Canadian, the reason why I'm long is this multi-year trend line was broken. And now I'm still long, continue to stay long, and frankly, I'm targeting a lot higher levels. But right now, if you're trying to find a catalyst why the dollar is going to go higher, it's going to be there has to be some sort of catalyst that drives the dollar higher at this point in time. And the reason why is because the dollar is going to be a little challenged at the moment because we're dealing with rates that are dropping, bonds that are rallying. You know, and the dollar had a great move on Thursday, Friday, following the ECB, but there has to be a further catalyst that really is going to drive the dollar higher, because at this stage in the game, we may have a dollar that looks like it's breaking out, and which I'll clearly go over in the euro and some of these other currencies. But what's going to really drive it higher? Because it's not going to be the bond market, I don't think. You were talking about bonds earlier, and I really don't think right now that the yields are going higher. Yields are actually dropping, and I think yields are going to continue to drop, which is not going to support the dollar. That doesn't mean the dollar is not going to go higher. I'm just saying that the one catalyst that would really help the dollar at this point would be a move higher in rates, but that doesn't look to be the case at this point. So, but regarding the dollar Canadian, I guess I should go into this. This is a bull flag that's developing. I think it's a nice bull flag pattern. We have to break above 132.10. So we're not too far away. We're about 20 pips away from that. And as you can see, the pullbacks in the dollar Canadian have been very shallow thus far. A break higher above 132.10 would then take the dollar Canadian to the channel high, which I think is the 127% extension. Which will also which would be about the 133 level. So I am expecting at least 133, but ultimately I'm expecting us to go a lot higher than that, because technically this is a major breakout, multi-year trend line, and I believe we're heading anywhere between 135 to 140 in the dollar Canadian. That doesn't mean it's going to happen today. It doesn't mean it's going to happen tomorrow either, but I think over time we're going to be moving higher. And the one catalyst that would drive the dollar Canadian higher from here is obviously the ripping up of the NAFTA agreement. Now, when you talk about NAFTA,
how about risk off too, Blake? You know, you used to talk about that usually rallies during risk off periods.
Oh, yeah, yeah, commodity currencies. That's true, Dale. I mean, commodity currencies and emerging market currencies tend to sell off a little bit more during risk off, which I think is completely viable at this point. That you would see a weaker Canadian dollar, and I think that's what's really going to kickstart the dollar Canadian moving higher at this point. But a real move down in the Canadian dollar to launch us towards 140 is not going to happen unless we see Donald Trump rip up the NAFTA agreement. Now, look. You think about Donald Trump, and you think about the approach he's taken on trade, on negotiations. He's obviously playing hardball. Now, you may not think, and I may not think, that it's possible that the U.S. can leave NAFTA. That it might not even be possible that he has the power to rip up the agreement. But if I'm playing hardball and I'm Donald Trump and I really want to try to get something done, couldn't I just say that's it, we're done with NAFTA, and whether or not it actually ultimately at the end of the day ends up happening, if he rips up the agreement and says that's it, we're not, we're walking away, whether or not that actually takes place in the weeks to come, because he gets a lot of pushback from Congress, and then they say it's illegal and he can't do that, but in the meantime, what happens to the Canadian dollar as a result? And what happens to Canada's stance regarding NAFTA? They might say, okay, we're going to do whatever you say, and Donald Trump may be fully aware that he can't actually legally leave NAFTA, have the U.S. leave NAFTA. But I mean, if he really wants to play hardball, he can do something like that, which would freak the market out. I'm just saying that he may not be able to do anything, but if he threatens to do it or does it, or says he's going to do it, you know, that would send the Canadian in a tailspin. We would be a lot higher quicker, and then possibly reverse. You know, we could get up to 140 and then reverse quickly thereafter. But it's something that I think is a risk, especially technically. The dollar Canadian is breaking out, so that's something that, you know, for me, as long as we trade above 131. Actually, it's 130.70 because that's the breakout point here. I wouldn't be on the short side of the dollar Canadian right now. It's a pretty big technical breakout as it stands. All right, now let's talk about like some of these other pairs though. Let's talk about the euro. Let's start there. Hey, Stelios. Stelios, are you there? Well, we heard Stelios briefly, and he's actually on an island in Greece, so his internet connection is going to be very poor. So I'm not sure if he's going to be trying to join us today. But the euro dollar is developing what I would call a bear flag formation. So you can see it developing quite nicely. We had a double top play out the same day, which was absolutely amazing. And believe it or not, I actually tried to buy the euro dollar twice as we got towards the 116.40.50 level, and actually I don't know how I managed to make a couple of pips on both of those trades, but I did. And like I said, I'm not sure how I managed to do that, but I managed it. But right now the euro dollar is set up for a bear flag formation. So what I'm looking for is any rally towards 116.40, 116.50 is going to be a bearish event, or maybe even allow for a move or a new trade for a short. So I'm looking for the euro to do something like this, and if we break through the 115 level, targets may come in around 113, and that 113 level would be a, let's see it right here. That'd be the breakout point, spike highs from back in November of 2016. So I think that's very doable in the euro dollar. Am I short the euro yet? No. Am I looking to be? Yes. Have I taken a trade? Not yet, but obviously it's on my radar and something that I'm looking to do. Hopefully sometime today, get a short off, maybe about 30 pips higher than where we're currently at. Take the cable. Cable's trading really heavy. Now I'm going to show you what I think is a big deal about the pound. Is the pound has had a very shallow retracement. Now you look at the major double top that we had over here in April. We broke down, and here's your neckline of the double top. We still haven't completed the double top, which would take us down towards 130 and change. But I'm going to be very clear here. When you have a breakdown, you can see the breakdown here in the cable, and you only have a 24% retracement. Those shallow retracements like that usually lead to a pretty aggressive move. So even though I think that we'll eventually hit this target at like 131 or 130 and change, I think we got a lot lower levels coming in the cable, just from a very shallow 24% retracement standpoint. Hey, Stelios, I think we can hear you. Wow.
Here I am.
Oh, is that you, Dale? No, I'm just saying Stelios, I think, is trying to join in from internet.
Oh, an island. Oh, yeah.
He's on an island, by the beach. He's trying to tune in. It's just not working. But
okay.
Good effort, Stelios, if you can hear us. Good effort. So anyway, the pound has had a very shallow retracement. I think it's going to eventually break down. I am not short the cable, but I think below 132, you have to imagine the stops that are building here. You can even see on this last leg down from Thursday, the last leg down here, look at how shallow this retracement has been. So that should take us to new lows. Okay, so it's just a matter of time, in my opinion, before the pound breaks down and the euro breaks down. Am I short either one of them? Not yet, but they are on my radar, obviously, of trades to do. Same goes for the Aussie. I was short the Aussie pretty aggressively on Thursday. So I captured a lot of this move as we broke through this trend line. I didn't stay in it, so I'm not short anymore. But the Aussie dollar looks quite bearish at this point. Now, one of the things that's so key about the Aussie is the rejection of the underside of this major multi-year trend line.
Nice look.
Yeah, it rejected not last week, but the previous week.
Yeah.
You know, we set up a pin bar on the weekly chart. You can see the downside that flushed out last week, and eventually, you know, we break through this. Just call it 74 cents, which we're at 74.40 right now.
That doesn't bode well for gold either.
Oh no, and I'm gonna go into gold and silver.
Did you hedge your physical position?
No.
I'm kidding you. I'm kidding you.
Physical stuff. I mean, the spreads are so bad on if you go buy. If you buy silver or gold, you're gonna pay a hell of a spread getting
10%. About 10%, I think.
Yeah, it's about 10%, maybe a little less than that. Yeah. Depends on your broker. But this one was less than that. But still, you know, obviously, if you're taking like for me, I bought physical gold and silver about 2 months ago or so. And you know, and put it in the bank vault. So you know, it's just it's obviously not something that I'm trading. It's just something that I'm holding. But gold and silver, they do know me. Hella reversals actually. But I'll talk about that here in a second.
Okay.
All right. Kiwi dollar, high consolidation here in the Kiwi. I think the Kiwi is going to eventually break down, but you have the Aussie New Zealand currency pair that looks really quite, you know, like we're heading lower. I mean, the Aussie New Zealand should hit 106.80, maybe even as low as 106. So the Kiwi might continue to outperform just a little bit in the near term. Here's a Swissy. The Swissy has a bull flag formation, major bull flag formation. Whether you draw it like this or you draw it like this, which here's your 4-hour chart. Okay, this move in the Swissy breaking above this 99 cents was a big deal. So now any move lower, you know, I'm bullish in the dollar Swiss, and I'm hoping that we get a little bit of a dip in the dollar Swiss, maybe back towards 99 cents, so I can pick some up. The one thing that worries me just a little bit regarding the dollar Swiss is if we do get continued risk aversion, will the Swiss franc outperform the rest of the European currencies? And it may, just like the yen tends to outperform when you have some risk aversion, the Swiss franc does as well. But the Swiss franc, obviously, there's a big cost to carry long Swiss francs. I mean, you have our rates that are at 2% here in the U.S. and Switzerland still negative 0.3% or 0.7%. Here, right here, you can clearly see it. You have the Fed at 2%, and Switzerland is at negative 0.75%. So, you know, you're paying a really big premium to own Swiss francs. But in a period of risk aversion, banks or institutions may opt to pay a little bit of interest for the safety of Swiss francs, or the perceived safety of Swiss francs. I think it's a hard trade, but again, in a period of risk aversion, that may be the case. So that's the one thing that you'd have to worry about being long the dollar Swiss. But I think overall, longer term, the dollar Swiss looks like it is moving higher. The Nordic currencies like the U.S. dollar, Norwegian krona, U.S. dollar, Swedish krona, we have a potential head and shoulder pattern here with the U.S. dollar, Norwegian krona. You can see it on the 4-hour chart. This is a possible head and shoulder pattern. I wouldn't get carried away with the U.S. dollar, Norwegian krona at this point in time, but if there is a play against or into selling dollars, the US dollar and Norwegian krona would be my natural selection. I just think that the dollar is going to strengthen overall, so against most major currencies. So I'm not willing to take a short here, but for those of you that are, we may be developing a head and shoulder pattern that will eventually come into fruition if the dollar does at some point break down. Because if you look at the US dollar and Norwegian krona from a if this is a truly a head and shoulder pattern, we have a long time to develop this pattern. It probably will take a couple of weeks to develop. So it's just something to think about for those of you that are actually bearish the dollar. Because if you're bearish the dollar, I would limit it to some of these other currencies, like maybe some of the Nordic currencies. Now, another pair that I was looking at is the US dollar Mexican peso. We have an ascending wedge. We have a Gartley pattern that is trying to develop. We would eventually hit 21, which we hit 21 actually, or pretty damn close. We came to 2095. Yeah. I mean, we came really close. I would think that if we can make it to 2107 to 2110, like that would probably be the best place to be short the US dollar Mexican peso. Would be like right here, looking something like that. I'm not short the dollar peso, but I'm just saying that if I was going to do it, I would try to do it a little bit higher. Now, speaking of which, since I am bearish the Canadian, but as you can see, the Mexican peso may firm up. Look at the Canadian Mexican peso, because this, and I don't trade this currency pair, but I want to show you how it's quite possible that we can get a pullback in the Canadian peso. The Canadian Mexican peso, we could pull back in that particular pair, which would then support dollar Canadian higher, US dollar Mexican peso lower. It's quite possible that that could happen. I'm trying to figure out a reason that would happen from a NAFTA standpoint, which to me doesn't really make sense as of right now, but that doesn't mean that something may not develop that will make sense eventually in the future. The last dollar pair that I want to cover is the US dollar Japanese yen, which I believe at this point is trapped right here between the 110 10 level, or 110 30 level, somewhere around there, and the 110.85, which the 110.85 is a pretty steep trend line that comes into play. So I think the dollar yen is basically sideways at the moment, but I think a breakout is coming. So whether we break out higher, which would have to mean that bonds are heading back down again, or we break down lower. So if bonds continue to rally and yields drop, the most sensitive currency to yields falling would be the dollar yen. So the dollar yen may actually buckle under some pressure. So what does that mean about the yen pairs? That would mean that the euro yen continues to drop, which would make 100% sense to me, especially in a risk off type of environment. The dollar or the euro yen would come off. The pound yen, big rejection this last week at the underside of this trend line. The pound yen will continue lower. The Aussie yen will eventually break down. It looks like something like this.
Yeah, that's classic.
Yeah. So the Aussie yen would eventually break down. The Kiwi yen, which will is coming into some really key support here, will eventually test this 74.50 level, 74.70 level, trend line support in the New Zealand yen. I think that's quite possible. And then the Canadian yen as well, which is breaking down here through a triangle. The Canadian yen will eventually break down as well. So again, if bonds rally, if bonds continue to rally, which let's go over to the bond market. If the bond market continues to rally like this, which I expect it to, that means all those yen pairs that I just showed you. bond market, I think, is doing this. Okay, then we're going to see a swift move down in the yen pairs, US dollar, Japanese yen, Canadian yen, Aussie yen, New Zealand yen, excuse me, Euro yen and whatnot. So I think that's all very possible, Dale. Now, I heard you earlier talking about, and what I'd like to do is I'd like to cover precious metals and also the indices. But what were your comments regarding gold and silver?
Basically, it all tied in with the Fed's worried about incipient inflation, but the precious metals are not signaling it. To me, it looked like a major breakdown in gold last week. 1240 looks doable. So the bearish gold, basically.
Yeah, and you know, first and foremost, I have to go back to last week, and I mentioned this to you guys on, I want to say it was Thursday or Friday. It might have actually been on Friday when just before this breakdown happened, or as it was happening. One of the best traders that I know, and I say he's one of the best traders I know, and one of the oldest currency traders that I know personally. And he has, the BBC did a special on him in 1986. If that tells you anything about how long this guy's been in the currency game, that should be a statement in itself. I talked to him probably every day or every other day. One of my idols in the currency market, I should say. We were talking about precious metals on Wednesday, Thursday, and he actually played silver to the long side. He caught this breakout from like 1660 to basically 1715, I think is where he exited. And we were discussing about, you know, the potential of a breakout in gold and silver, and both of us agreed that in order for gold and silver to break out, both the silver market would have to break above 1720, and silver would have to get a close above the 200-day moving average and above 1310, which did not happen. We got a spike above the 200-day moving average, and we got a spike up to 1310, and silver traded up towards 1720, actually 1730 here, depending if you were looking at spot.
You actually called it a short up there live during a phase session.
Yes, on Friday or Thursday, because I said, hey, listen, you could short it here and put in a tight stop, and that, you know, because I knew where the breakout points were, and I knew that we were not above them. So you know, the risk was a turn lower, which obviously had happened. Now, now that has happened, the question is, what is going to happen to silver and gold at this point? And if silver and gold continue to drop, what will that support? In my opinion, is it will support the dollar. If you have gold and silver that buckle, and for me, I see silver doing this. One of these two scenarios. Silver's going back down to 16, or it's going down to like 1560, something like this. Silver's going to do one of those two things, in my opinion. All right. That doesn't mean I'm not longer term bullish on silver. I'm just thinking, you know, here over the next couple weeks, we're doing one of these two moves. Okay. And if you look at gold, in my opinion, gold is going to 1240, like this. Okay. That's what I think is going to happen in gold. Now, if gold drops like that and silver drops down to 16, what does that do to the euro dollar? What does that do to the dollar in general? I would think that the dollar in general is really going to see some downside pressure, or excuse me, the dollar is going to see some upside pressure. You know, the euro is going to break down. Dollar Canadian makes it to 133. Aussie dollar makes it towards 72 cents. All that's going to transpire. Euro dollar trades down below 115.
if gold and silver continue to break down. I think that if there is a catalyst that's going to help drive the dollar higher, it's going to be a breakdown of these precious metals, which after the reversals that we saw on Friday, there is not I would not there isn't a chance in hell I'd be trading gold and silver to the long side right now. I just wouldn't. I mean, and you look at gold, it's consolidating below the previous support here. I mean, gold looks like it's going to 13, like I said, 1340 or
what would be your guess for US dollar yen if gold went to 1240?
You know, that's a good question, Dale, because typically what that would mean is the dollar yen is going higher. The dollar yen was going to trade at 111, right. 112. And that's the one thing that really worries me about being short the dollar yen, which I'm not. I'm just saying if I was short the dollar yen, that's the one thing that would worry me. I mean, because what this could do is a sell-off in gold like that could actually make the dollar yen
squeeze them.
Yeah, it's going to squeeze it through this 110.85 and take us to 112 again. So
you have a trend line up there at 112. Where's it come from?
That's a major multi. Here, you can see it. It's a multi-year trend line.
Okay. Oh, I see.
All the way.
Oh, that's nice.
Yeah, from 2015. I mean, that takes us all the way to 112. So that if gold and silver do eventually break down, the dollar yen might actually spike up towards 112.
Now I know where to sell it. Thank you, Blake.
Yeah, my pleasure. Because if we get to 112, I as well will be looking to short the dollar yen.
So maybe the Dixie is 96.5, 97 in that case. I know a lot of people are looking for that.
It very well could be. I mean, you look at the dollar index, which we haven't covered yet. The dollar index looks like we've got to move up towards 96, 97. The 97 would be 127% extension of this move, basically, right?
Yeah.
Now, another big development which happened on I want to say it was not beginning of last week, but the end of the previous week, so almost 2 weeks ago, is this. And let me adjust this.
Our guest is showing up today. He just got a hold of me.
Oh, great. Oh, great. Oh, okay, perfect. So we have a golden cross of the dollar index. You can see the 50-day moving average, the simple moving average, have crossed over the 200-day simple moving average. So that golden cross should continue to produce upside in the dollar index, which, in my opinion, points above 96 and possibly 97. Yeah. So, a lot of this is technical right now that we're seeing in the dollar, but what I'm having a hard time grappling personally is what is going to be the driver of the
maybe
dollar.
It's a trade war. I've interviewed a few people who said if there's a trade war, the dollar doesn't get weak, it gets much, much stronger. I don't understand why, but he seemed to understand why. And when we're, do you know why the dollar would get stronger in a trade war?
I don't. Other than, maybe some risk aversion. Matter of fact, just as you were talking about that a little bit earlier, as you were making your opening comments about different currencies, and as you were talking about that, I looked at my email and I have a JP Morgan note that said, well, it says right here, China at the edge of a trade war. So I have an email that I'm actually going to read as soon as we're done on that particular issue regarding China and a trade war, and maybe what the ramifications of the dollar may or may not be, which I have to dig into further research, but what it could be, Dale, if anything, is just risk aversion. And a lot of people think that that there's going to end up being a dollar liquidity issue once again. And remember, that was one of the main issues that we had during the Great Recession, or the GFC, if you will, back in 2008. You know, we had a basically a liquidity crisis, and everybody was looking for dollars and trying to seek them out. And that's the, you know, what created this massive spike higher in the dollar way back in 2008, 2009. This was a big move in the dollar. I mean, it's a huge move in the dollar as stocks came under duress, and that could very easily be the case, you know, over the course of the next 12 months. You know, and that might be the catalyst, Dale.
Yeah.
In a trade war. So
yeah, I mean,
okay.
None of us have been alive long enough to, you know what it was like.
Oh,
not even me.
Yeah, in a trade war.
Yeah.
Right.
Smoot-Hartley, you know, I know a lot of people think I was around, but I wasn't yet.
All right.
Yeah, I know you do.
Couple last things. All right. You touched on the S&P, and I want to cover the indices really quick before.
I'll be back in a minute.
Yeah, sounds good. Before we get over to our Giuseppe, who's coming in today. The S&P. Let's not forget at what time of the year we are at. This is there's an old adage most of you guys know, you know, sell in May, go away. Now that doesn't necessarily mean, oh, it's May 1st, I'm gonna sell stocks and then come back in the fall and then buy them back again. Sell in May, go away is a generalization saying that, you know, at the beginning of summer, basically stocks tend to you know, give back a lot of their gains, and then you go back and you know, once summer's over, you go back and you get back in for the fall as you look for you know, eventually the Santa Claus rally. There's no set date, there's no set time, but seasonally speaking, you're talking about, you know, hey, you know, sometime May, June, market tends to top out, and then you go back and you buy stocks again in the fall. And if you do that over time, you tend to outperform the market. So we are in the you know, the first couple of weeks of June. We're about halfway through June. Obviously in May the market would continue to rally, but you know, we are in that summertime period where stocks tend to get back some of the gains. So, you know, Dale was looking at the potential of a move back down towards, you know, maybe the lower end of the S&P here, which would be around, you know, sub 2,600, if you will, and we're at 2,760. Well, I think it's entirely possible that we are in a consolidation period, that we do something like this, you know, that we move back down towards 2,600 over the course of the next couple months. Doesn't mean it's going to happen today or tomorrow, but if we do see a little bit of risk aversion or consolidation, if you just want to call it that, in the stock market, I think it's possible. The S&P hit the 261% extension. We stopped shy of the 78% retracement, which is also ironically what it does. And I'll draw it this way. We are making a series of lower highs. Now that doesn't mean that we have lower lows yet, but we have higher lows, which also means that, you know, a move down to 2,600 or so would keep us in the theme of lower highs, higher lows, which means that we're just developing some sort of longer term consolidation in the market, which again, based on seasonals and where we're at currently, I think it's entirely possible that that does happen. Excuse the voices that you guys hear. This is my office. I just turned down the speaker just a little bit. Okay, so there's the S&P. Let's take a look at the Dow. The Dow stopped at the 618 retracement. Let me get rid of this. And let's do this, because I think this is probably more what we're looking at. Look at the Dow, right? The Dow hit 618. NASDAQ 100. Now, the NASDAQ 100, let's talk about this for a second. If you look at the NASDAQ 100 and you look at longer term, this is a weekly chart zoomed way out, 161% extension comes in around 7,200. The last move up, we hit 71.89, didn't quite hit that 7,200. So it's like we almost had unfinished business in the NASDAQ, which we hit. Now, NASDAQ composite, I'm just pulling up the composite here. The composite also hit the 161% extension, the entire composite, and then we rallied in new highs. And Dale pointed out in the NASDAQ composite, would this be a 3-drive, Dale?
Yep.
Okay, so 1, 2, 3 drive. RSI is still below 70 on a weekly basis. It's divergent. Yep. That's bearish. So to me, it looks like the NASDAQ's going to continue to roll over. The Dow may have peaked at the 618. The S&P is making lower highs, and you take volatility is abnormally low, which volatility could very easily be trading back at 20, 25 again, which would coincide with stocks being lower. And on top of that, let's go over to, where's the DAX? I just had it. Where did my DAX go? DAX. Where is my, I don't know how it disappeared, but I'll pull it up anyway. Here, hold on. All right, I don't know where my DAX went, but I'm gonna have to throw it in here somewhere. It should be up here by these other European indices. So here's the DAX. The DAX also is struggling, possibly setting up a double top. It really is underperforming our U.S. counterparts, and with a looming trade war with Germany. Yeah. I mean,
except for the NASDAQ, every one of them looks like a failing rally.
Yeah. I mean, they do. So, Dale, I think the market is really, quite set up for a little bit of risk aversion, and the dollar may perform a little bit better as a result, just for that reason alone. It's interesting how you get this self-fulfilling prophecy too. The dollar may start off as firming as we see a little bit of risk off in the stock market. And then eventually it morphs into, well, the dollar is rallying because of this, that, and then the market starts to develop some sort of thesis of why price action is moving the way it is. But right now we are seeing signs of a dollar rally and the beginnings of what could be something much larger in the market, in my opinion. And I'm going to be a little irritated if I'm not able to get a short euro dollar off at the 116.40 level, 50 level, which I'm trying to do right now. I just don't know if it's going to happen. I don't know if it's going to happen here. So, Dale, are you still there?
Yeah.
Oh, okay.
Yeah.
So anyway, but those are my major thoughts. I didn't get an opportunity.
Great job.
Thank you. I didn't get a chance to answer many or no questions, but let me see here. It looks like Giuseppe is there. Let me see if there's anything in particular. Okay. Let me just make mention of a couple of things before I go. If you guys use ForexAnalytix and you're a subscriber, we did release a major release of, this is our first major upgrade of ForexAnalytix. There is one known issue where some of these panels are grayed out, and we're working with our developers on that particular issue, which is our major issue. Also, in a chat room, it seems to have affected this is our community chat room. So you guys are on Jumbotron. Just if you're having a hard time with like scrolling, being able to scroll back or being able to write. We know that there has been some issues with the chat room that have developed as a result of our launching of the new ForexAnalytix site. But this is our first major upgrade. So just try to be patient with us. We are aware of some of those issues, but if you're seeing anything different from that, make sure that we have on our website, you can go to the home page, and you can contact our support people directly right here. Okay, you can contact them directly, and you can let them know what your issues are, so they can note it and make sure that we are currently aware of it, and because we know that there are a couple outstanding issues that we're dealing with. And last but not least, before you bring on your guest, Forest Park FX, they are our sponsor of this webinar. So if you are looking for the reimbursement program, or you just want you're not happy with the current broker you're using, make sure that you contact them. There's the email address and their Skype account right here where you can contact them directly. They are there to help. Make sure you utilize that resource for you, for yourself. If they can help you, they will, and if they can't, they'll tell you that they can. But everybody, thank you so much for being here. Thanks for being patient with us with our new release. And Dale, I'm going to turn it over to you for
good hunting today, buddy.
Thanks, Dale, and have a great interview with Giuseppe. Okay.
I will.
Right.
Giuseppe's always great to talk to. Mr. Footprint, Giuseppe, I just passed you the controls. You have control over a television set now. Hey, Giuseppe, how are you, buddy?
Hey, good morning. How are you? How are you?
I'm doing okay. So, wow, the dollar really expressed itself last week with the ECB. I know that you look for program trading, the algo footprints. Did it anticipate what Draghi was going to say? Because all the news out there was saying, oh, they're going to end QE and raise interest rates. And I know a lot of people got long looking for the euro to advance and bottom pick it, and they were creamed.
Actually, I was looking for a deeper retrace here, and I'm showing you the trace here. My trace was
okay.
This one. And as you can see, the dollar index was much more aggressive. So it started moving out of a different anchor here. But when we look at much,
yeah, go ahead. Yeah, I missed it too. I was looking for 92.50 before this happened, but
okay.
Go ahead. So you have some fib levels above it to where it could head to, where the smart money.
Maybe
go ahead.
Before below, because this level here, the 87 level here, was not completely unexpected. In fact, it was a 50% retrace from the low 2011 to highs 2017 here. So I was looking for something to happen there, and there is also as usual, the other side of the coin, right? I mean, we have been following the euro together. I believe now it's more than I think it's almost 5 years. And you remember when we are looking at this chart, I think back in 2014 now.
Yeah, the big fall from 140.
Yeah, so you will remember this was the the second test here on 2012 when Draghi said, we're going to do whatever it takes to save the euro. Well, if we look at the chart, obviously, something is wrong there. What happened is, you remember this, sorry, it was a 139 here, so it was the highs to the low here, the dip into the 120 area. And that brought price into the first segment, right? Most importantly, as you can see here, with this piercing of the 21.19 here, sorry, 21.97 here, basically we lost any support for longs, long-term support for longs in the euro. Now, look at what happened recently. And it was very interesting what Blake was saying before. You know, I was prepared for something like this, and that's our next measure move in the euro. So I would totally agree with Blake, that we might see something going on the second part of the year here, or even at the beginning of next year. But
we're
the
under
euro
103, not 95-ish, huh?
Yeah, I mean, I have a clear target for the euro here, which is 95, and if he gets there, it has the potential to get to the bottom of this range here. Of course, we're talking about long-term moves here. So, in a way, the euro dollar was the other side of the coin of the dollar index, was basically confirming, while the dollar index has traded a 50% long in here. The euro has traded the next measure move short, so that's what I see here.
Okay, so let me use your terminology. Smart money will be selling rallies, and dumb money will keep trying to buy the dip.
Yeah, well, dumb money, they see the small the big lower, right? So at the moment, they are kind of aligned, and if we bring dump money in here, I use it simply.
Oh, look, you even use dumb money.
I use simple moving averages to model dump money, and interestingly, Blake also mentioned before the break from this formation here, but we already have a setup. We already had a setup short in the and as you can see here, it seems here that dump money is aligned with smart money, because now dump money is looking at this big move lower, right? So they also anticipate the market continuing lower. But we also have a smart money setup here, and as you can see, I mean, it's been respected very precisely here recently, and we have targets below already, 113.60 and 111. That's what I see.
Okay, let me ask you this: when you're not always right, no one is.
Of course.
When you're not right, and you're trading smart money levels, does smart money become dumb money, for at least that occasion?
Oh yes.
So even smart money could be dumb money.
I mean,
and dumb money could be smart money sometimes. Huh?
Well, I mean, I think so. Meaning that nobody's ever right, and I use simple models, right? So they will never be able to capture everything. I think you know, I made many mistakes, at least a couple of mistakes in the US dollar Japanese yen here, following the model.
Okay.
And, I think we discussed that as well.
So my God, with your outlook on euro, you must be looking for a sharply higher U.S. Japanese yen, are you?
Well, I mean, if I look at the models at the moment, we are moving laterally. We are moving laterally, but we are doing this on top of this large 50% here, the 170 that has traded back. And sorry for the digression here, but because you mentioned the dump money, right? Let me show you how I believe the dump money will work. Now, when we
I love when you talk about me.
but you're not dump money. You have too much experience to be tagged as dump money. So
I'd rather be some kind of money, dumb, smart, than no money.
No, but look, I mean, these are just models, right?
Right.
These are just models, and we just I just use them to try to put some order in a mess, because prices is a mess, right? So it's just a way to put it. I'm sure you have, you know, many ways to put order in the mess. For example, the RSI, the third drive, that's something that I hear you mentioning a lot. So that's something that
one trick pony, Giuseppe.
Pardon me again?
One trick pony.
So
all right, so
money, that won't count. If that trick makes money,
Yeah. All you need is a trick. So to me, it looks like a symmetrical triangle. I know that's not really your stuff. You're looking for the footprints. So
yes.
where are the footprints that smart money is leaving on the beach in yen now?
So large time frame, very large monthly. There was a long participation at 170. So I'm sure there are many professionals and algos as well, and group of algos who are long on this large time frame. When we look at the daily and weekly and daily here, we have at the moment, the only thing I can say is I can see as well is a market oscillating between 108.78 and 112.43. Now, normally what I would say is that because we have this large setup long, this consolidation here should, but we don't know, resolve on the upside. The problem here is that if we get a risk-off stance in the market, we could see US dollar Japanese yen retesting this 170. I mentioned the dump money before, right? So let me show you the way I see it operating here. And these are simple 10 EMA and 30 EMA, which identify value area, which is the area within the two EMAs. Now, when we look at the 170, when it traded, there was some commitment when we started seeing this participation on the upside here. Clearly, that indicated some commitment from professional foreign trading at the 170, right? But dump money was still looking at this huge move lower. So whenever they took the opportunity, they pushed that price back lower into the area which is controlled by algorithms, and that's why we saw participation. Price back, participation again with algorithms buying even more, price going back again, and now at the end, of course, large participation from foreign trading always wins, I believe, and that's what we're seeing here. But again, these are models to try to put some order in the mess.
Okay, so the bias is to the long side based upon a setup from what, a year ago?
Yes.
Okay.
July, well, 2 years ago now. It's July.
Oh, wow. Okay.
Yeah.
And this may just be a pullback before we get something equivalent to what we had off the 16 bottom, which was what, about 1,800 pips. If we got that from say 106, 104.60, that would take you to new highs, wouldn't it? It'd take you to, or the old highs, back to 22.
This larger time frame here, it has targets above 137.73.
Wow.
And, of course, we're talking about targets that take years to materialize, right? If the market, I mean, if ever the market gets there. At the moment, you're seeing a little bit of weakness, I believe. Are you interested in the SP 500? I follow.
Yeah, sure.
Very closely, and this is very interesting and technical market, as you know. Also on this one, I think in 2014 we were talking about the levels, and this is the SP mini futures.
Right.
And you remember that we traded that 666 back in 2009. Someone was having fun there, I believe.
Yeah.
And basically it was this level here. Now this is the continuous contract of the SP 500. So you see a break here, but in reality that's only the way it is calculated, because the low was 666. Okay, so the low was this one within the 61% level. And you remember that I mentioned always 1916. Now it's 1963 because of the way the prices are calculated, but doesn't change. And the second target was 2,500. Price went well above that level there. Okay.
Right.
Now, in order to understand what happens next, I always keep tracing the sequence of measurement. So we had October 2014, we had 2015 and 2016 lows here, right? So let me remove the large one. And so we saw price getting into first and second target and well above it. Now, something that is not traded yet, at least in my models, and you know, they're pretty, they tend to be pretty reliable, is this level here. This level is never traded before, but this is the next in line. If we want to a healthy market, what it would do in my models would actually trade this level and bounce.
Okay, so where does that come in? Around 2480?
2490. That would be the level.
Okay.
So I believe that if we get risk off again, and you know we get a big move lower here, maybe in conjunction to the seasonality here, starting basically now, July, mid of July. I'm doing a study on seasonality, which is pretty interesting. I'm going back 70 years, grouping data in ways, and basically what you always see is July. It's not May, sell in May and go away. It's actually sell on the 15th of July and go away. That's the time when seasonality kicks in.
Into October? Is that what it's showing?
Correct. Into October, either the beginning or the half of the month of October. So, you know.
So let me ask you this. We talked, you know, when the market was heading down, you know, into this 500 level, 2550, and it never got to, you know, where you thought I think you were thinking 2470 or 90 back then, but you said that even though you're looking for this, and I think this speaks to your discipline, you made a comment that you will not participate in this drop, and is that because it's counter trend? And you're just going to sit back and wait for the buying opportunity after the sell-off? Is that your style?
The only tool that would help me in this short, and I didn't get this short, was dump money. The smart money cannot help me with this because I have no reference in here. If this was the start of a bear market, then we would have some reference and we could start tracing the sequence of measure move lower. But the market is moving higher, right? I mean, the market is an upward market. Now, that said, there was this low here. There was an inner measure move here, and let me show you how we could get there. Now, that said, inner measure moves are always more difficult to capture because they are, you know, because you need to study the markets but basically this high here, this was the anchor that was used to basically hold the market. Again, I'm choosing this after the fact, not before the fact. But this level, the 2536, could offer support again if this market starts moving lower and continues into its 2490. But 2490 is a very solid level. It's a multi-year level that actually satisfies the model here. So this is very strong. Do
you have anything? What's your red level under 20? The red line is 2490.
Well, no, the red line is 2395.
Oh, okay. So
that, and we could be in trouble, real trouble.
Okay.
Because if we go below 2395, then this market is exposed. Doesn't mean that it's going to do that, but it's exposed to a potential drop into basically 1400, right? That'd be 1443. So and you know, these models, I basically they hold back onto the data of the SP90 and back to the Dow Jones since 1890. So basically this model hold on the markets in the last 120 years. So when something like that happens, I really take note of it. And
well, you've really given us some pearls. I mean, you've given us some very long range targets in euro, and you've broken down the
I'm glad I can help.
Yeah, well, you know what? You could also help people that are interested in your method, which, you know, has my full-throated endorsement because I've watched you trade. And if you want to show your website and how people could get a hold of you, sign up for your classes, because I know you have an appointment coming up. So
yeah,
why
sorry
don't we do
about that.
that?
I'll need
That's
to
okay.
go in.
You gave me enough to make. You gave me enough information to make $1 million today, buddy. All right.
Yeah, you need another $1 million to make $1 million with this. But yeah, I mean,
I'm making thousands of nickels. I made 1,000 nickels last month, man. All right, go ahead.
So this is the website, fibstalkertrading.com. Fibstalker, it's my nickname. It's Fib. You saw the way I use Fibonacci. I don't use Fibonacci in a conventional way. And if the way we model the market, it's not only to find low risk opportunities, which are, but also as I showed you in the example, also to try to actually find a structure in the market, see where the market is going. Okay, so I think that's one distinctive element of the methodology. And you know, I offer a free package. I mean, if you wanna come on my website, have a look a little bit at the narrative here, what and why it is important, why algorithms are important. For the resources you can have a look at, the free course that you can download, you can access to as well. It's a video course. I mean, and you know, if this methodology resonates with you, it can be very, very useful. It does not always resonate with people, not always, like everything else. Just because I have, as you can see, I don't use any kind of indicators in order to understand what's going to happen next. And the last thing I want to say, thanks Dale for allowing me, is that we never blindly buy these 50% levels. In fact, we use the same structure on the smaller time frame side when the algorithms are participating around these areas, and this gives quite a good, you know, take on what's going on actually, right? So I have some testimonials that have been working. Thank you, Dale. I mean, you are great as usual.
Yeah, so visit Giuseppe's website. He's the Italian stallion of FX, and you know, and he's like, you know, like Rocky of FX. So you know, don't mess with him either. He rides Harleys. Okay, so you know, he's I had the pleasure of meeting Giuseppe. He rode a Harley out to see me in its leathers. So you know, check him out. You could follow him on Twitter at Fibstalker, and his website address again is www.fibstalker.com. Thank you for your some of your macro outlooks, Giuseppe. I was kind of struggling as to, you know, whether or not this was going to be just a correction in the dollar, but some of the numbers you talked about in euro tell me that the dollar has a long way to run, although there's going to be corrections along the way. Very valuable to know your outlook in the dollar. I appreciate it.
I share the view of Martin Armstrong when it comes to the dollars. A lot of people, you know, doom and gloom. They're afraid of the dollar crashing, but a low dollar is good for the world.
Right.
We have to be worried about a very strong dollar.
Yeah, that's deflationary. I mean, that's why gold's going down. I'm sure you have the same view in gold, but the S&Ps could blow off even with this dollar rally. Sounds like you're looking for about a 120 Dixie with your euro targets.
The euro?
I'm just ballparking.
The euro, you know, previous lows and possibly even lower, 0.95, 0.96. And the dollar index here, I mean, it has a
107.
Yeah, 108 and possibly even higher. But you know, we really don't want to see the dollar index there. I mean, if we see the dollar index there, you'll start seeing emerging markets not being able to pay their debts. I mean, it's going to be a complete disaster.
It'll be a liquidity crisis. Everyone's going to sell the kitchen sink to raise cash, and then the dollar will be king. And since Larry Kudlow has recovered from his heart attack, I'm sure he'll be talking about King Dollar if we get up there. So great talking to you, Giuseppe, my trading water brother.
You have a great day, and thanks for thanks for having me.
Okay, everyone, thank Giuseppe, and go to FibStalker @FibStalker and www.fibstalker.com. You're welcome, Paul. Everyone enjoyed you, Giuseppe.
Thank you very much.
Good hunting, buddy. Keep in touch.
Thank you as well. I will.
Thank you. All right.
Bye-bye, everyone. Right. Thank you very much. Okay.
That's a wrap for our Monday session. See everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. See you tomorrow. Good hunting.